My name is Joaquim Pedro Antunes, and I'm the CTO of Trade.io. I'm going to have a quick talk with you about decentralization and the road to decentralization from an exchange perspective. So, I've been a fintech professional for the last 20 years. I've been in blockchain since 2013, and professionally working exclusively with blockchain and cryptocurrency since 2016. I should also say that all opinions expressed here are my own and do not necessarily reflect those of my employer. So what is Trade.io? Trade.io is a centralized custodial exchange. It was 100% financed via an ICO, so there's no VC money. We have our own token, and we have a liquidity pool that rewards token holders with 50% of our profits from the exchange, from our FX brokerage, and from other investments that we are doing, including Nest Coffee Shop and some others that will be announced soon. I joined Trade.io back in May, but I'm well familiar with the story of our exchange. Launching during a prolonged bear market definitely left some scars, but I really want to thank everybody involved in making this project a success so far, especially my team, who have been absolutely extraordinary. So why decentralization? Let's start with the definition of centralization. Decentralization can be said to be what stops a single person from making a very big mistake. It can be said that its crucial decisions cannot be made by a single party. And that is part of the ethos that drives us towards decentralization. Centralized exchanges such as Binance act as their own custodian, their own clearinghouse. They are also an investment bank, a central bank, and they're not decentralized at all, in my humble opinion. How is the crypto economy doing so far? Cryptocurrencies have outperformed most asset classes this year again. We can already see some winners and losers. So Coinbase reports 13 million users. That's extraordinary. BTC dominance is over 60%, so they are the king. Decentralized finance is here. There's already $600+ million locked in decentralized finance projects. Libra is coming, and so are central bank digital currencies. Now, central bank digital currencies and Libra will immediately gain more adoption than any other cryptocurrency, especially because they already have the power to reach more people. If you had 2 billion users, 10% of them pick up Libra, that's 200 million users right there. In terms of technology, the security, privacy, and scalability are not solved problems. Usability is not even addressed yet. And market manipulation resistance is not what you might think. With decentralized exchanges, front-running, order reshuffling, and some other tips and tricks can happen, and it's not clear that it's a better option than a centralized exchange. Technologies that are really impressive so far are Plasma and zero-knowledge proofs. But they are just nascent technologies, and they are not ready for widespread use. It's hard to explain what they are to normal users. If we were to go towards a decentralized exchange, we would need to choose which type of decentralized exchange we would go for. I mean, a true DEX is non-custodial and it's permissionless. It does not allow for censorship of access or settlement. Order matching and liquidity are managed on-chain and are obviously dependent on the performance of the chain. Okay, so the online settlement becomes the bottleneck. We can see in the market right now a number of different DEXes out there that make different trade-offs and pick different technologies to achieve different goals. What happens is that none of these can be truly considered a DEX yet. So what drives us towards designing a DEX if we think that the technology isn't there and the market isn't ready? Regulation. The inconsistent regulation across jurisdictions makes it hard to have global projects. The cryptocurrencies are meant to be decentralized and borderless, and yet we have to comply with regulations that stop at the border. These regulations increase our operational costs, and the countries that whose people we would like to serve best by giving them access to liquidity, countries that are under economic sanctions, for instance, they tend to actually block cryptocurrencies too. So it's not regulation pushes us to look for different solutions. Okay. Also, being a centralized exchange, as you know, carries a lot of risk, such as hacks. I think about $1 billion was lost last year by the major exchanges. And ultimately, KYC is mandatory for us, but also puts us in a difficult position. If you were to look at the group of people that we call the underbanked, these are people who don't have an easy way to prove their identity. These are people who they were given a name by their parents, and that's about it. Okay, so we can't always do KYC for the people that we want to serve with cryptocurrencies. It's terrible. But regulation is also a way, has a heavy weight in our profit making, okay? So this is just a quick example. Facebook recently experienced some regulatory pressure because of things that you are obviously familiar with, and the results were catastrophic. On a single day of trade, billions were lost. We do believe in the ethos of decentralization. We believe in self-sovereignty. We believe in security, privacy, and autonomy in all aspects of your life. By using money, you should not be excluded from having the right to privacy. But being compliant with regulation is part of our core mission, and we don't want to run risks with the investments that our community has made with us. So we are walking very slowly towards decentralization. That was pretty much it. That was my message. Decentralization is amazing, but we're not there yet. Thank you very much.